Hi, welcome to HouseFlippingSpreadsheet.com. You're watching a brief video tutorial on how to set up the project setup sheet. Setting up the project setup sheet is the first and most important step for starting a new project because this information is going to be used throughout the spreadsheet for analyzing your deal and reporting your project information. You can navigate to the property information sheet by clicking the setup gear icon on the rehab workflow, or by clicking the gear icon located in the upper right hand corner throughout the spreadsheet. The first section of the project setup sheet is the general property information, which includes the property type, property address, school district, the number of beds and baths, and square footage. This property information will be presented on the various reporting options throughout the spreadsheet. On the right, you can also set up your company information, such as the investor's name, your company name, company street address, and your contact information. This company information will be reported on all reporting letterheads and footers throughout the spreadsheet. I would recommend you set this information up on a template file so you don't have to re-enter your company information every time you start a new project. Now, the property information and the company information are not required fields, and it's just strictly information that's going to be used and printed on the different reports. But it won't be used in your actual analysis, so you can skip that information if you're wanting to perform a quick analysis for the project. You have two different calculation options for calculating your property values and analyzing your rehab deals. The first calculation option is to determine the maximum purchase price you should offer for a property. For this calculation method, you only need to input your after repair value, and the Rehab Analyzer tool will take that after repair value and subtract your buying costs, your holding costs, selling costs, repair costs, and your desired profit to calculate the maximum purchase price you should offer for a property. However, in certain scenarios, you may have a known purchase price or maybe even an actual purchase price and are wanting to calculate the actual profit based upon that purchase price. So for example, maybe you're speculating that you can buy the property for $50,000, or in fact maybe even you've already purchased the property and gotten the property under contract for $50,000. You can enter that known or actual purchase price value to calculate your actual profit on the project. For this calculation method, the spreadsheet will take your after repair value and subtract your purchase price value, as well as your buying, holding, and selling costs and your repair costs to calculate your project profit. Once you set up and enter your project values, you can set up how you're going to fund the project. The default setting for the spreadsheet is to fund the project as an all-cash deal, meaning you, the investor, will be funding 100% of the project costs with your own cash, and you won't be receiving any outside funding. If you're an all-cash investor, you can move on to the next step, which is to estimate your repair costs using the repair cost estimator. Now, if you're going to be receiving outside funding from a private money lender, hard money lender, or a business partner, click Outside Funding and select the amount of loans you'll be utilizing to fund your project. Once you select the number of loans, the detailed loan information will be displayed where you can set up your financing information. The first loan option you'll see is to designate the loan type as an interest-only or amortized loan. The default setting for the loan type is interest-only, which is the most common lending type for private money and hard money lenders, but you can change the loan type to an amortized loan, which is common for traditional banks. Once you select your loan type, you will need to select your loan amount. There are 6 different loan amount options that you can choose from to fund your project. The first 5 loan amounts are calculated amounts based upon your rehab analysis. The purchase price only loan amount would be a loan amount for only the purchase price value. All other project costs, such as your buying, holding, and selling costs and your repair costs, would be paid for out of the investor's cash. So depending on your analysis calculation setting that you selected above, this could either be the maximum purchase price value that's calculated on the Rehab Analyzer, or it could be the known or actual purchase price that you entered above. The repair costs only loan amount is a loan amount for the project repair costs. This value is based upon the total estimated repair cost value that you estimate using the repair cost estimator. The purchase plus repairs loan amount is a loan amount for your purchase price plus your repair costs, but it excludes other project costs such as your buying costs, holding costs, and selling costs. The all project cost loan amount would be a loan amount for all upfront project costs required to rehab the property, including the purchase of the property, your buying costs and holding costs, as well as your repair costs. One thing to note is that the selling costs are not included in this loan amount because generally selling costs are not paid for up front. They are generally paid for and deducted out of the proceeds of the sale. The final calculated loan amount is for the after repair value, which is the after repair value amount that you originally set up in the property value section above. If you don't want to use the pre-calculated loan amounts, you can input a specific loan amount or dollar value that you intend on borrowing for your project. Simply select and check the specific loan amount checkbox and enter the specific loan amount value into the yellow cell. Now that you've selected your loan amount value, you'll need to enter the length of your loan payments. The length of loan payments amount is the number of months of payments you will be making to your lender. So if you plan on holding your property for 6 months and making loan payments for the entire holding period, you would enter the number 6 into the length of loan payments cell. Now that you have set up your loan amount and the length of loan payments, you can set up your financing terms such as your down payment information, your interest rate, and your lender points. The first option is to set up your down payment percentage or your loan to value ratio that you will utilize to calculate your loan balance. Depending on your lender, they may require a cash down payment up front to originate the loan. If your lender requires a cash down payment, select Down Payment from the drop-down menu and then enter the down payment percentage amount. Now, some lenders lend based upon a loan-to-value ratio, such as a percentage of the purchase price value, a percentage of the project costs, or a percentage of the after-repair value. If your lender lends based upon a loan-to-value ratio, select LTV from the drop-down menu and then input the LTV ratio percentage, which will then reduce the loan balance amount on the right-hand side. Now that you've set up your down payment or loan-to-value ratio information, you'll need to set up the interest rate which the lender will charge you for borrowing the money. To set up your interest rate payments, simply input the interest rate percentage on an annualized basis. Once you input the interest rate, you can choose whether the interest will be made on a monthly basis during the rehab or whether that interest will be rolled into the loan balance and paid when you go to sell the property. The next financing option to set up is your lender points, which are the fees that the lender is going to charge up front to originate the loan. To set up your lender points, simply input the points percentage your lender will be charging. And again, this is similar to the interest payments. You can select whether the points are going to be paid up front or if they'll be rolled into the loan balance and paid when you go to sell the property. In certain scenarios, you and your lender or your business partner might agree to a profit split in which you and your lender share a portion of the profits. To set up your profit split, first select Yes from the drop-down menu and next enter your profit share percentage that you will be keeping for yourself. The spreadsheet will then automatically divvy up your profit share and your lender's profit share based upon the percentage and current profit in the deal. If you are confused on where the profit shares and profit amounts are being calculated, the total profit amount is being calculated on the Rehab Analyzer, which you can adjust later on when you get to that step of the analysis. Now that we have completed our financing setup, you can review the loan results, which calculates your total financing costs and provides a breakdown of the total project capital, your funding, and cash that's going to be utilized for the project. The total project capital amount is the total upfront capital required to purchase, hold, and rehab the property, which includes your purchase price value, your buying costs, holding costs, and your repair costs. The funding value is the total loan balance and funded amount that you are receiving from your lender. And the cash up front is the cash that's required to be paid up front for your down payment and your lender points. The cash during the rehab is the funding gap that remains from the difference in the total project capital and your funded amount. The cash during the rehab is calculated by taking the total project capital and subtracting your total funding and the cash that you paid up front to calculate the remaining cash balance needed for the project. Your total cash required for the project is then calculated by adding your initial cash invested up front plus your cash required during the flip. Now that you've set up your property values and your funding information, you can now estimate your repair costs using the repair cost estimator. We thank you for watching our video tutorial on how to set up the project setup sheet. If you have any additional questions, feel free to shoot us an email or give us a call.